Okay, welcome everybody to this evening's XAUUSD Securities webinar. My name is Duncan Cooper, and tonight's webinar is Live Forex Market Review. So before we get into it, if you can all read through the disclaimer. For those on our YouTube live stream, I cannot see the chat, but you're more than welcome to follow the link that I've given so you can come into our webinar room and ask questions. I've got the webinar chat box open and question and answer box open for those in the webinar. So I'll just give you enough time to read through the disclaimer before we move along. All right, we might move along. That should be enough time. Now, for those that don't know me, if you're in the webinar and you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities, and I am a full-time Forex trader. Been trading now for more than 15 years, mentoring for more than 10. If you want to contact me about the webinars, then my email's there, duncan.cooper@acy.com. And through the week, you can connect with us at our website, acy.com. Go to the Market News tab, or our YouTube channel, XAUUSD Securities Australia. If you want to connect with me on my personal handles there, Twitter and LinkedIn, there they are. If you want to connect with me there, then just take a note and connect. And if you want to get access to our Telegram channel, contact Nathan.bray. I'll put his details in the chat now. If you want to get access to my chart layouts and templates on MT4, Nathan can help me out with that too. So anything to do with a demo account, or if you're interested in a live account, a chat about that, just contact Nathan. These details are there in the chat. All right, so let's get into what the market's doing. So first up, we'll have a look at the news. So we've got lots of news coming up over the next 3 to 4 trading days. In fact, next week. So we're in Thursday at the moment. Over the next, I should say, 6 trading days, including today, there's lots of news items coming out. So first up, the big one will be tomorrow's job figures from the US. But tonight we have, these times are Queensland time, so at 11:30 p.m. Queensland time. We have the US unemployment claims. That's going to maybe give us a bit of an insight into what may be coming from the unemployment figures, because this is unemployment claims. So if claims are up, then maybe the unemployment rate is creeping up. So we did have worse figures last month. So the market will be definitely looking at to see what the figures are this month for December. And then next week, Tuesday, we have US CPI data, Wednesday, PPI data, Thursday, and then early Wednesday morning, we've got, well, so early Thursday morning, we've got the FOMC statement, interest rate decision from the US. And in the same day, we've got, I think, the UK interest rate decision and the Eurozone interest rate decision. So lots of fireworks. So things you're going to have to be very much aware of and dodging how you're getting in the market and out of the market, and how be well prepared for these events. Okay. And I'm seeing here, I don't know how accurate this is. Euro rate, 6 rate cuts in 2024. I don't know what that's all about, but you can go and view that if you really want to. All right, so the big question now from a news front is maybe countries are starting to keep their interest rates now at a level. They're not really raising. And the question will be over the coming months, as we head into the new year, will be, will interest rates start to get taken down, decreased in some of the countries around the world? All right. All right, so let's get into charts. And this week this is the weekly chart of the dollar index. We're having a week up. We're managing to be holding above this weekly old high at 103.60. And notably, this major run up, we've pulled back to 62%. So kind of gives you the impression that maybe we might be, are we going to be putting another leg up there now? Of course, the data over the next week is going to start to determine that factor. But, if we finish with a very positive week this week, then I would suspect maybe we're going to start to move back up this range. All right, we're going to have a quick look at the daily chart. Daily chart, it has traded above that high, so is the daily chart trend may be changing. So over the next couple of trading days, I would be looking for maybe a retest of 103.60 on the dollar index, and do we maybe see a higher bottom coming in this area? A retest to hold to move up. So if we start to see that kind of mapping out, then maybe pairs to the US dollar are going to continue their sell-off that we've been seeing over the last week. S&P 500. This is how I was mapping things out on Tuesday. We haven't changed trend yet, so we are just stalling at the high of July this year's high. So, and it is, I was going to say that's the July high of this year. We're not at the all-time high. This is the July high, so the high of the year. All right, so we're just stalling ahead of the high of the year. And we're just kind of floating around the 79% level of this major range. So we could be topping out up here. We'll have to wait and see. As I was saying on Tuesday, if I was looking for a short up here at high levels, then I'd like to see the price come down to a lower bottom, come up and form a lower top like I've kind of mapped out here, and we haven't had that kind of form yet. May get that forming next week, so it's worth waiting to see if we are going to be forming some form of lower bottom, lower top scenario. If we do, then we may start to see the next decline forming on the S&P 500. All right, into the euro dollar now. On Tuesday, I was drawing my fib like so and discussing, okay, we've had the best part of a week down. Can we get a rally? No, we can't get a rally at the moment. And we might get a rally soon because we are coming down to fill potentially this imbalance or fill some of it. We've come down to day support here. So this could act as interim support at the moment for at least a rally back up, 107.56. I'm not really that fussed about trading up because I think we may have topped out up there. I'm just looking to see where price maybe can rally back to maybe offer the opportunity to sell. So we've moved through a couple of support areas. This is a monthly area, which is a bit, sometimes it can hold, it held here, and then sometimes it can break because it's a bit of a wishy-washy area that's been traded above and below a number of times. So I might actually just take that off at the moment because a more recent level to watch would be we've broken below this last Friday, 108.52, and then, broke below that on Monday because that's Tuesday, Wednesday into Thursday there. So Monday we committed below 105.82. So what I want to start to look at now is the range of this week. So that's the high of the week. That's the low of the week. I can get this fib to draw properly. I have a weekend holiday and I can't use my tools. So that is Monday, and that is the low of the week. So that could well be the high of the week. So price may cycle back up inside the range of this week to form an intra-week high somewhere. And I'll move to the 4-hour chart now. All right. 62 areas at 108.40, 108.52 is a broken level of day chart support. So with the job figures coming around the corner, if we're talking about levels to watch for the job figures on Friday, up here at 108.52 area would be great. That's assuming we can get up there. At the moment, just from a pure 4-hour chart perspective, if we don't want to have a day up and we just want to continue down all week, there's a 4-hour range here that we're trading within. So if you move that down to a 50-minute chart, which is really the high from the high of yesterday. A couple of areas to watch if you want to look at these areas intraday today. 107.93, the 79% level. That would be my preferred level to look at because it's the highest level within the fib tool. We could see a revisit to 108 today. Of course, don't forget we've got the US job claims coming out later in the day, that could certainly see a spike up. And maybe we don't want to go up as high as I'm discussing, or not until Friday's data comes around. So today we may just stay within the range of yesterday in terms of retracing back up. So my preferred level will be up here at 107.93 or 10800 up here. You can see yesterday tested 10800 yesterday twice. You can see the day before where the weight was getting support ahead, getting support here, and then it broke below. Once it broke below, it's become resistance. So 10800 is clear intraday resistance at the moment. As long as no news comes out to really destroy traders' belief that that should be the sell point, then from 107.93 to 10800 would be the area to watch today if we can get a high rally on the euro dollar. For an opportunity to look for your sell setup. Euro yen, heavy sell off today. If you go to the day chart, if you're not already in, it's difficult to get in today because we're already potentially at the bottom of the day. All right, we are at the 79% retracement of the weekly range, and the weekly chart is in an uptrend, and there's a support area here. So this is well worth watching this area for support to come in a reversal, 156.581. All right. Very much overextended on the day chart trend, but the daily chart trend is down. So we have the weekly trend is up, day chart trend is down, and we're at the 79% pullback area. We're at the previous area of support that we false broke and came back above. So this is potentially a strong area of support. It's a question of, can you see a setup down in this area today to warrant you having a go at trading back up from this area? So you could watch the 4-hour chart for a 4-hour chart entry, wait for rejection. Can you see a break of a candlestick high on the 4-hour chart to trade back up? Or if you want to get real tight and cute, can you see a 15-minute reversal? It's difficult to draw a trend line at the moment. The last real swing point was up here. So it's quite acute. But what you can see at the moment is, from a 15-minute chart perspective, we've had one candle that's committed below, and then the next one had an outside reversal. So it's being watched at the moment on the 15-minute chart. Can we see a 15-minute chart reversal that offers you a signal to say, okay, I want to jump in and get quite a tight entry down there at that level? So it's worth watching. We're way beyond the projected low of the day, so we're way overextended. We are from the average 5-day range. If I just draw a fib across the range, price is it's 27% below the measurement, and right now you can see getting a little bit of support there at 156.58. It's definitely an area where you could look for a very tight entry. Almost been down to the 162 level, extending below the normal range of the day. So it is overstretched. It's not where you want to be selling. It's either where you want to be taking profit if you're already short for the day, if you're in an intraday trade, and it is an area where you can start to watch for a reversal. All right, doesn't look like it's reversing at the moment, but if you get a very significant trend line break there, then you have to work out, do you want to have a go at trading up? Euro pound, this looks like it's bottoming out here at the moment. It's putting in a little mini double bottom here. We're just trading above yesterday's high. So, trading above yesterday's high is the trigger for the buy. Stop below here to at least maybe expect this can trade back up to broken weekly support. This is a weekly support area at 86.09. So there is a trigger there kind of telling you that we maybe have traded down just short of support. This is a monthly level of support from memory. It is this area here, 85.47. All right. And can we reverse back to the upside? Right, it's very much overextended. So as I was saying on Tuesday, I would anticipate we're going to move up to 86.09, broken weekly support, and then, you know, did we maybe hold there to have another go at trading back down? All right. A nice rejection down there on the 4-hour chart. So 4-hour chart entry was the break of this hammer, stop below the low, and that's starting to show profit. So starting to show a reversal down there. It's just, if you like the euro pound, how do you want to get in? Probably have to go from a 4-hour perspective at the moment. And we're trading above yesterday's high. So, you know, buying now, you need to put your stop below the low. And in terms of pippage risk, it's about 25 pips. So that's not a lot of pips. You just need to then work out your appropriate lot size to, you know, risk what you like to risk on a trade. So just from a day chart perspective at the moment on the euro pound, it's potentially putting a little bit of a minor double bottom reversal. And I would anticipate this. There's quite an imbalance here. If you go to the 4-hour chart, there's quite an imbalance. There's actually an imbalance starting from the high there. There's an imbalance there that needs to be filled. There's an imbalance, most definitely there at the moment, that needs to be filled potentially. So I would anticipate this is maybe going to move up, at least fill this area of imbalance back up to weekly resistance. All right, pound dollar. All right, so it's trading down to an area of old support resistance. Okay, we have put in a lower top, and whilst it's not showing as a major day chart bottom, there's a little bottom in here. We came down to here and then moved back up like so. If I just draw it in my drawing tool, we came down to there and then went up to there, and then we've come down this way. So really, if we can look at that, those swings in the 4-hour chart, and we just hit support from the day chart perspective as well. But the day chart has kind of put in the lower top, changing the trend at 62% of the range. So that's that move there. So it was really a 79% setup up here. Nice reversal on the 4-hour chart up there. We're obviously down at the, you know, if you're selling up here, this is your profit taking area at the 127 extension into daily support. So now I would be monitoring this range from this top to this bottom and see where the rally finishes for the next decline potentially. Wouldn't want to be selling down here really. You know, structurally we're at the profit taking phase, so you want to wait for the next rally in my mind. So I would be looking at this range. This is a range from the day chart. Does the US news over the next couple of days drive this up to the highest sell levels? 62 at 126.56, or up to 126.79 to 126.87, which is a 79% level. So look for the next lower top to form on the day chart. Don't get caught at the bottom. Of course, it can keep having a day down and a day down. That's what it's been doing all week. But, you know, it's starting to form a downtrend on the day chart, but you're at the profit-taking area. Look for the rally. I know it's boring when you're waiting for the rally and it doesn't want to come. But if you wait, you can see here. When we hit the 62% area up here, if you were patient, you know, price comes down to this point. Yes, on the 4-hour chart, it's making you a lower top, lower bottom, but it comes back up to retest the area. It's moved down. It's gonna come. Well, if it conforms to normal technical analysis and price structure reaction, it should come up this way. Or it doesn't have to, because the market's always correct. But if it's going to offer a similar movement like before, somewhere in this area is the area to watch if and when we can get a rally. All right. Pound yen's had a heavy sell-off today. So the day chart trend isn't able to hold itself. It's broken this area of potentially strong support. It's actually moved below weekly support here as well at 183.81. Pretty sure that's weekly support. There we go. Now the weekly trend is still up, but it is, can it hold that weekly trend? Very similar to the euro yen. It's at 79% retracement. So you could look in this area for the opportunity for maybe a reversal. And 79% levels at 182.45 and last month's low. So we're having a month down is here. So we're, if you've had my lesson on monthly highs and lows, monthly lows can be a strong, clear area of support for at least a rally. So does the 4-hour chart offer you an entry? Do we get a rejection, break of a 4-hour high, trade back up? Very overextended here. There's an imbalance being formed today into this weekly chart, 79% retracement. There's an imbalance. There's a number of imbalances on these 4-hour candles. So this whole area at the moment, the first imbalance formed is up here, happening underneath this area of support. So we may well see a rally back up to this area of support at some point, or this area of support here. All right, this isn't where you want to be selling. It's definitely either you're holding your position for the long term, or you at some point, if you start to see this reverse, you want to lock in your profit. And there could be the opportunity to trade back up this way, because from the weekly chart perspective, this could be the low for the next move up at the 79% level. So if you can start to see something that looks like a reversal down at that level, then you need to make a decision. Do you want to take some action on it? 50-minute chart at the moment, again, like I was saying on the euro yen, if you could see, it's a bit difficult to draw a trend line down here at the moment. There's not too many swing points in this area. Trend line's probably something like that at the moment, because we haven't had any candles up through all this downward movement. So there's no new swing point in the low area. So it'd be nice if you had a new swing point, so you get a much more better feeding trend line, and then can you see a reversal and trigger to maybe trade back up? All right, very much overextended. It's done the range for the day, so in theory it probably come back up within the range, but can you see a trigger that you like to trade back up the range? All right, let's get into the Aussie yen. Again, it's been moving down here. I can see it's broken on the 4-hour chart below last month's low. So what we are seeing on the monthly charts is a possible double top. We're having a month down after a positive month last month. So very positive, trading into that last year's high, but then we're having a month down. So the reality is, if you could get a position away to the short side here on a nice pullback, we could be trading down to 87. And we're at 95 at the moment, or fractionally above. So there's plenty of time to get in, and there's plenty of room to maybe make a good profit. If we are, forming a significant, if we're forming a significant double top up here, the double top target is down at 73.67. So you could be holding this for the next few months if this wants to start to unravel, but we'll have to wait and see how things transpire. All right, so weekly trend though is up. So, we just have to be a little bit aware that the weekly trend could still hold itself, could pull back to the 62.79% level. Like we're seeing 79% levels pull back on the euro yen and pound yen today. So at the moment it's at the 62 level. So it is an area where, that could be an area where you want to start to look for a buy, depending on what is your viewpoint for the long-term trend of the Aussie yen. We have that possible monthly double top. Is this just a pullback within the weekly trend before it's going to get some resurgence and blow through that top? Sometimes it's difficult. You have to decide which side of the market you want to be on, and take that bet, and then you have to wait and see how the market unfolds. All right, so if you're still very bullish on the Aussie yen, well, maybe you need to start to fish at the 62% level or the 79% level of the weekly range for a reversal back up. So we are coming back into an area at the moment of previous area of consolidation that occurred before orders were accumulated to move up. So, and we're filling an imbalance in this little area here as well, which will be seen on the 4-hour charts. Not so much on the 4-hour chart, but there's an imbalance here. Just say kind of in that area just there. All right. Should be shown on the 4-hour chart, but I'm not seeing it. The 4-hour chart, it was a little bit consolidatory there. So just want to, there's a bit of an imbalance in this area here, but that's getting filled today. So in any event, we're hitting 62% level today. Now, if you see a 4-hour rejection, you may want to get long from this area, maybe factoring in the idea that this could be where the next weekly low is coming in for a move all the way back up to retest the high areas up here. Now, from a day chart perspective, if we look at fibs, let's drag that over because that's the weekly range that we're trading down within. But there's, of course, the double top. If we're unraveling from the double top and we're just going to continue down, then the day chart range is from this high to low at the moment. So then, we did have an intraday rally yesterday back up to this high. So intraday, this area became resistance because we just traded back up inside the range of the day before, rejected that low and that high. So, 96.91, if we can get back up into that area, approximately 97, it's a little bit short of the 62 and the 79, obviously, but just that candle yesterday proved that the sellers are there, wanting to keep the market now below this high here. So, if I was looking at that logically at the moment, do I want to be a buyer down here if it reverses? Probably not, because that candle yesterday quite clearly told you that the sellers are wanting to be in control of this area to move it down. So we may well be moving down to the 93 area before the buyers can maybe, get some support, and we'll have to wait and see. So, what side of the market you're looking at. Personally, I would be looking for a low to come in here at some point and have 1 or 2 days up and look for a lower top to form on the day chart. That's what I'd be looking for. And ideally, maybe back up to this high here at 96.91. So whether or not the market's going to offer that, we'll have to wait and see. Having a very negative day today. When I was looking at this morning and we finished with a positive day yesterday, I was thinking, well, maybe we're getting support ahead of this area. Trade up today, but quite clearly yen's been getting stronger today through Asia into London. All right, so but can we see some form of rally back up to the strong resistance area that's been forming here yesterday, this week? All right, so the Aussie, we're having an outside reversal week to the downside at the 62% level. This is actually at the monthly range. So, if I'm kind of forecasting for myself what I think may be happening, is I think we may be doing this. When I see a reversal week, an outside reversal week at a 62% monthly fib level, I'm thinking, that was the monthly move down over many weeks. That's corrective. Are we now putting in the next leg down this way? All right. Unless we can break the high of this week that's formed this week, then my philosophy would change. At the moment, I would see the market being like so. So then I want to have a look at how I can get myself set to get short. Now I can see there's two weekly highs here that the market's gotten very close to this week, and we're having a bit of a bounce intraday. And if we do turn around and take out this high here, I'll have to change my philosophy in the short term. So I'm anticipating we'll get a bounce in this area. And then can we maybe see a lower top forming on the day chart? So on the day chart at the moment, you see we just got a 1 or 2 pips short of the weekly support area. So I did discuss that area, I think, on Tuesday. And if you're watching that today, that would have been an area to start to look for a reversal today if you wanted to get long. Kind of missed that boat now. In terms of this further moving up, it's coming up to broken day support here at 65.70. So today, we may well see, depending on how much strength is in this rally at the moment, there's the 4-hour range. 62 level is plumb on top of daily resistance at 65.70. So if you're on the buy side at the moment, you need 65.70 to break to the upside. If you're looking to structure something to the short side, 65.70 is your level. All right, 65.70 is up here. At the moment, it's just managing to hold at the central pivot point, but it may just could come up to that area. And as I'm looking at price structure on the 50-minute chart, there is an imbalance to the left. It got formed here yesterday. So we could actually come up to the 79% level today, depending what that US news does later in the day. So 62 areas at 65, 69 day resistance 65.70, 79% levels at 65.81, and that would kind of line up with this imbalance here. Price coming up to maybe fill this imbalance before then being able to continue its move down. All right, so I'll be looking at these levels later in the day. What's happening up here or up here? If we only hold at the central pivot point, you could, of course, be looking for maybe, do we break, if we break this swing point without taking this high out, that in itself would be a trigger that we're trading back down to the low of the day. All right. So you just have to monitor to see how price start to form at these levels. And do you see a trigger for a reversal? So whilst this is relatively strong at the moment, it is only trading back up within the range that it's formed today and the range of yesterday. Okay, we're not trading above yesterday's high or anything. It's just, this is just correcting this 4-hour movement down at the moment. All right. All right, that's my thoughts on the Aussie dollar. Getting into New Zealand yen. Just want to see where it is on the monthly. It's getting back inside the range of last month. So what I want to do on the 4-hour chart, I'm going to go from the low of last month up to the high of this new month and see where the market's positioning itself. And let me just go to the 4-hour chart and look at the last month's range. So that's the low of last month to there. We're at the 62% point at the moment. So that's definitely a support area, and you got 4-hour support across here. So again, if we see support coming in here and you get a break of a 4-hour candlestick high, maybe get a 4-hour candlestick rejection, we could, that could be an area of support for the month to then trade back up the range. So some fib levels to monitor on some of these pairs on the yen crosses. Like I was saying, euro yen, pound yen, they pull back to the 79% levels of the weekly range. We're at the 62% level of the monthly range up to the new high of this month. And we're at 62% level of the weekly range on the Aussie yen. So can the yen strength continue, or are we going to start to see some bottoming out on these pairs? So you can watch that level at the moment, 89.06. Get on the 50-minute chart. Are we going to see some form of movement back up on these yen pairs? New Zealand dollar. It's a bit consolidatory here at the moment. It is structurally in a very significant area where the market could potentially fail, because on the monthly chart, it's traded up to some old lows from the left historically. So around the 62 area, 62.04. I said on Tuesday, I was watching the area on Monday thinking that area is probably where the market's going to top out at, but my first day back from holiday, so I thought I'm just going to be a little bit not too aggressive. So, but we are definitely holding there at the moment. All right, there's your weekly kind of reversal candle forming. I know we're not at the end of the week yet, but some of these pairs that are reversing down this week, we could well be just be looking, if we finish with a negative week this week, we're just looking for a rally back up inside last week when it's finished for a movement down next week. All right, so, assuming that this candle's formed for this week, just going to the day chart, then I would be looking for a rally back up within the range that we formed this week. Do we come up to the 62 area? Much better would be up here at the 79% level at 61.98 up to 62.04. That would be my primary area of focus if we could retrace back up. That retracement could start to happen tomorrow after job figures. Might happen early, come next week. Could form, that is that's a little minor top there. We could form, if I drop it to the 4-hour chart, we could form some kind of, left shoulder, head. Do we come up into this area to form a right shoulder? All right, so that could certainly come together over the next couple of days. Of course, depending on the jobs data, we could blow straight through there, but it is having a negative week from a clear area of resistance from the monthly chart and 62% retracement level, where you'd expect the market to hold. So it's doing what we would expect. Is it going to come up now and do a retest and a failure? Okay. So watch that area up there at 61.98 to 62.04. I'm just trying to get rid of that line. And do we form some form of head and shoulder pattern up there? All right, dollar Canadian. This is how I mapped it out on Tuesday. Could we get a dip down? It didn't play friendly, didn't offer you the dip, but it is finding support from a day chart perspective now over 2 or 3 days. Down at this weekly chart, 79% retracement. So are we mapping it out on the weekly charts? We false broke the monthly high. We could be forming a long-term double top, but if we're getting support down here at 79% retracement of the weekly range, then I would think at the moment we're going to maybe come up to retest. Could fail once more, quite obviously, or move through. This is looking like maybe we've traded down 79% retracement on the weekly scale, and we're trading back up. All right. So it would be nice if the market could offer a retracement back down. If I drop to the 4-hour chart, it would be nice if it would offer some form of retracement back inside the move of this week, 62 level or a 79% level. So really the opposite of what I was just saying on the New Zealand dollar as we head into next week. And are we seeing, support coming in at 79% weekly level for then a move up for the rest of the month? All right. Of course, this is a US dollar versus the Canadian. I think as well, I may have overlooked it when I was discussing the news. We do have, well, it was actually, I know we had the interest rate decision for Canada. It was earlier this morning. So there was no, I had it in my mind that maybe it's going to come in the early of Friday, but it's of course already happened. So no change on the interest rates, no cutting. Now, if we did have a cut, then that would be dollar Canadian positive. If we had a rise, that would be dollar Canadian weak. So it came in as expected. And depending on the market's philosophy, does it think that maybe Canada may cut their rates before the US? And if that is the case, then we could just be simply putting in a higher bottom on the weekly chart. So can we trade back down the range a little bit and look for the opportunity to trade in the area of the 62 to 79% retracement area? We've also false broke last month's low here at 135.38. That's the olive line. So moving back down into retesting last month's low, or into this area, and then what happens? All right. I don't want to get caught at the top of any move. I'm always trying to look for a retracement. Of course, if you're wise down here, if you know what my 4-hour entry method is, there's your 4-hour candle reversal. You could have taken a 4-hour entry here, stop below the low, and you're already on board. You're not now at the mercy of the market, waiting for the market to create you a setup. There was a setup previously this week if you're on your toes. Okay. Now, if you didn't take that and you'd like to trade the dollar Canadian, you're having to wait for some form of setup maybe to form on a pullback. All right. All right, let's get into franc, dollar franc. At the moment, the last more than a week's trading at the moment, it's starting to show wicks here underneath 87.57, which maybe I'm going to have to go to a higher time frame to work out where that's coming from. I think that's my monthly level from a higher time frame. So this monthly low here, 87.57, if we get to the day chart, you can see once we move below that day, so 2, 4, 5, for 6 days now, any movement back above 87.57 is getting met by sellers. So really, this is in opposition to what we're seeing on some other pairs, is that we're seeing US dollar strength. Sorry, we're seeing US dollar weakness versus the franc. Whereas we've been seeing dollar strength on the pound US dollar, dollar strength, euro dollar, dollar strength. Whereas here, we're actually kind of seeing dollar strength versus, we're seeing dollar weakness versus the franc. All right, so the franc's very strong at the moment. So it's a bit consolidatory, but at the moment, it's worth us watching this monthly level of broken support, 87.57. You can see it today. Kamek is coming up, giving you a 4-hour entry here if you want to trade off that level. Just there. Stop goes above here. And, are we trading down? Because this is your resistance area at the moment, 87.57. So if it can revisit 87.57, that's an area to watch, maybe on a lower time frame, for an opportunity to trade down, because it's clearly showing you for 6 days now, anytime it gets back up to 87.57, it's being met by the sellers. Granted, if I was wanting to trade something, I'd probably look at a different pair because it's not going very far, but quite clearly the sellers are getting this capped at 87.57 at the moment. All right. Dollar yen, very negative today. I don't know if anything got released today. I don't know if there was no news on the calendar. So whether or not something's been said from the Bank of Japan, or the market's just decided, that the job figures tomorrow are going to be poor, and everybody's clamoring on board on the yen pairs to just get short, versus the other currencies. So not seeing any news there that's been released that would, drive us in a very large day down. So it hasn't had the rally that I was looking for. I'm actually, as I was saying on Tuesday, from the weekly scale, we've moved below the last higher bottom, and we're 4 weeks down. All right, so we're kind of due a rally back up on the weekly scale to maybe put in a lower top. It is trading straight into weekly support at the moment, so we could see a bounce here. So I'm still looking for, I'd be patient with this pair at the moment and look for, that's the range that we've been forming down. I will be, looking for a rally back up within that range for a weekly lower top to form. might take the whole month or into next month to start to show that. So for me at the moment, that's what I was looking for. We're trading to weekly support, so we could see a bounce here. I'm not really looking to get long, but if we do hold at weekly support, we're probably going to see a rally back up this way. So you could be looking for an opportunity to get long if you want to trade that way. Not seeing anything on the 4-hour chart suggesting reversal at the moment. We may see some rejection down here through the day, like on the other pairs. If I just go back to my other yen pairs, the euro yen, can it reverse? I don't know. Dollar yen, if we drop that to the 15-minute chart, again, all these yen pairs are looking very similar. Very well overstretched for the day. They've exceeded the day's range. This hasn't been having any 50-minute candles up since it started its real decline. Last 50-minute candle up was here. It's very difficult to draw a trend line in because the swing point's there and the swing point's there and it cuts through price action. So it's very difficult at the moment to draw a trend line that you could really use. You need a few more candles to come in this area, but this could hold here. If we start to see a higher bottom and a higher top forming in terms of swing points on the dollar yen there, it's quite clearly on weekly support and it's overextended. Maybe it's going to reverse back up. Can you see a trigger that you're happy to trade back up to the upside? It's overextended for the day. From a 4-hour chart perspective, there's a definite imbalance. Imbalance started in this area here. There's an imbalance most definitely in this candle. That's way overextended. See that imbalance on that candle? See how price action came back up to fill some of it. So I'd expect some of this to get filled back up. So this isn't where you want to be selling. It's where you want to be taking profit. And if you want to be aggressive, maybe you could look for an opportunity to trade back up the range if the market starts to reverse. Okay. And Jen, you're saying there was a 30-year bond auction for the yen and leading indicators released today. Okay, so something. Okay, of course, then the market's reaction to that has been yen positive, dollar yen negative. Okay, now notably as well, whilst I would like to see a really nice corrective rally from the weekly scale, what I can see this week, we've broken last week's low, and we've broken last month's low here. They're at the same level at 146.64. So maybe we can't get a significant rally. That will be definitely an area to watch for a rally back to, and then maybe the next decline. You don't want to be selling down here. So just purely on a 4-hour scale, there's the last 4-hour top to the current low. Let's say we hold there. 62% level is very close to last month's low and last week's low. So 146.56 and last month's low at 146.65. That would be an area to watch for just a rally back to. And then you could look for an opportunity to short down from that area. But that's not where you want to get short. It's overextending for the day. And Anjan's kindly given us a link on Bloomberg for that item from Japan. So we could be, seeing a big unravel of the carry trade, depending on the market's philosophy in terms of the US dollar interest rate position. And, maybe we might see some more positive iteration from the Bank of Japan in terms of maybe they might let their bond rates move up a little bit. But, quite certainly from a monthly scale here, we weren't able to trade above last year's high, a few pips short, and now we're having 2 months down. So quite clearly, the market was very much ready to sell up there. That's why from the weekly scale, I would like to see a lower top form. If we can see a lower top form, I don't know, it's a question of waiting, but if we could see a lower top form, that would be, a true confirmation that, okay, this double top here could hold for the long term. That's why I'm looking at that scale. All right, but on the lower time frame scale, you may just see a rally on the 4-hour chart to position yourself still to the short side. At the moment, this is trying to move through that weekly support level. So, getting long up here, it is most definitely counter trend to what we're seeing this week. So you have to make a decision as to whether do you really want to bet on that trend that we're seeing unfolding today. All right. All right, let's just finish off with gold. We're actually getting support. I discussed this level on 2009 weekly support. Discussed that on Tuesday. That was one level to watch for a reversal back up. Even though we've had a massive rejection, you know, we're at the 62% area on the weekly range. Been a little bit below it to weekly support. And that could have been your best buying opportunity to then see if price can come back up to retest the monthly area of resistance that we rejected this week. All right. So you kind of missed that area. That was your best opportunity this week if you wanted to get long. Now, of course, still we could come back up. So areas to watch. We could revisit 2009 and further hold a support, and that could be an area to buy. We could revisit 2070 to 2079, the clear area that we rejected. That's the monthly area of resistance. That would be the area to watch for a sell. This is, I said as the other day, this is the area to watch for a buy, but you've probably missed that. 4-hour chart, if it breaks above this minor high, it's going to turn the 4-hour chart into an uptrend. So looks like a 4-hour uptrend is going to maybe start to develop. So from that point of view, you could start to watch for, you know, a move up. Where does it finish on the 4-hour scale? Could finish at these highs to the left here. So let's just map that in. Could finish at those highs for then a 4-hour pullback. So then you're waiting for fib retracement, 62 to 79% level. Could form a little mini left shoulder, head, right shoulder here at the 79% level for then a continued move up. That's assuming that the market will develop like that and play nicely. Okay, so that would be something I would watch for. Of course, the market may just go straight up and retest the resistance area from the monthly highs without pulling back. But really, from my position, I like to trade pullbacks, not try and catch that market move up. Down here, my 4-hour entry method, break of a candlestick high after it hits a level of support and rejects. It did reject on that red candle. Your entry was there on the break of that inside candle. Stop below there. All right. So there has been a number of levels where price is trading down this week. If you're on your game with the 4-hour chart, you could start to trade a reversal using that method. There was an opportunity there on gold. There was an opportunity on dollar Canadian on Tuesday, down at the weekly 79% level. All right, so depending on how you're trading, there have been some entries to the upside on the 4-hour chart. All right, so any questions? So, we are heading into a very high impacting news item, I would say week, starting from tomorrow. If I can get rid of my drawing tool. So it's worth, even though we're in this week, we're almost at the end of this week. We've got the US job figures coming out Friday. We've also got the prelim UOM consumer sentiment as well in the early morning of Saturday. And then next week, so that's going to be fireworks for the US job figures. And then getting into next week, we have on Tuesday, the US core PPI, CPI month-on-month, year-on-year. Not putting yet what their expectations are, but we had quite a large drop last month on the yearly figure. Of course, they expect the inflation expectation area for the US is they want to be at that 2% level. If this moves below 3 next week, wow, we're getting close to 2 up. We're getting a lot closer to 2, which would certainly suggest that we could be seeing cuts on the US interest rates. next year. When will that happen? Who knows? Could be, is it going to be early in the year? Will it be like in the second quarter or later in the year? Because these are things that the market is going to be starting to factor in. Wednesday for the UK, we got the GDP figures. More inflation figures from the US at 11:30. So these are all Queensland time. Core PPI and PPI data. Expecting a negative figure for the monthly PPI data. In the morning, 5 o'clock, my time, the interest rate decision hasn't been put in there. I don't think we're going to see any change. We won't be getting a rise, I don't believe. I don't believe we're getting a cut because, well, it's too early to cut. So this is probably going to stay at the same level, but it'll be more about what does Fed Powell say in his statements in the press conference here at 5:30. All right. And then from the Aussie, we got the unemployment figures. This is probably going to be key to whether or not we're going to get an interest rate hike or not in February. More interest rate decisions here from the Swiss. Not expecting a change. And then we got, so in Thursday, we have Swiss interest rates, UK interest rates, Eurozone interest rates, and at the start of Thursday, we've got the US interest rates. So it is going to be a stop and start kind of affair next week. Difficult to hold a long-term position if you're not in a position that's profitable already. You have to be in and out probably around and before these news events. So be very aware what's coming out. So this is probably going to be the most volatile week in this week before we get into the next week after that, leading to Christmas. It'll probably start to slow down. So that'll be a very active week next week, and then we'll probably start to slow down for the rest of the year. Okay. So be very aware what's coming out. Of course, we have been seeing US dollar strength for the last week. So is that going to prevail as we head through those items? We'll have to wait and see. All right, so I'm giving you the levels that I'm watching at the moment and what I'm kind of looking for. And I am, having to dodge the news like everybody else, managing the risk. At times when we've got all these items coming out, sometimes it's a question of you're waiting for an opportunity to get in, where there's no news, and you always have to be at the forefront managing the risk. Very risky at the moment, just opening a position, heading into some of these items. So, sometimes it's better just to wait for the risk to pass and then see how you can get into the market. All right. So I'll leave you with that thoughts. Thanks everybody for your support as I've been away for a week on holiday. I've just come back. So thanks for joining me again. And I look forward to seeing you next week. So I'll be back next Tuesday with more analysis. You can just head over to the webinar page and register your interest. And I will see you next Tuesday. This is me here at 8 p.m. City time. Okay, thanks everybody.